Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia, and clearly the up move in terms of markets continues. We're trading almost near the 18,400 levels in terms of Nifty, and you have Bank Nifty, which is seeing gains of little over 150 points in trade today. The advanced decline ratio pretty much in favor of the bulls, and one interesting pack which is seeing good gains is the Adani Group of companies. Third consecutive session of gains coming in there. To discuss more in terms of what it means for the markets from here on and what one should do with the counters, we have Rohan Mehta, founder and portfolio manager at Turtle Wealth, joining in. Rohan, good morning and welcome to the show.
Good morning, Hiral. How are you?
I'm good, thank you. Rohan, let's start with the Adani Group of companies. It's the third consecutive session where the rally has continued, and after the Supreme Court panel has found no regulatory failure. The stocks are up almost in the range of 14 to 44% in the last three trading sessions. What would you advise investors to do?
There is two way of seeing both of the situation. One is that we always say that if there is nothing, then the crack of the stock of more than 60 to 70% would not have happened. So we would respect the Supreme Court decision and we would go ahead thinking that there was no other issues. But now, because most of the funds or the portfolio managers are not holding it, and we don't have the scanner of the stock also, so we're completely out of tracking this investment group at all. And see what ahead it happens also, because 3 to 4 days, 5 days, 10 days, the stock will take care of itself. But then valuation comes into the factor, then corporate governance comes into the factor, then the understanding of the promoter comes into factor, because it's a long term story. Then the whole discounting process comes into the factor, because who will invest in this area except Adani Ports? That's a big question on the, or maybe the ETF part, because it would be into a Nifty 500 or Nifty 200, Nifty 100 or Nifty 50. Except for discretion PMSs like us or a fund house, we would avoid as of now this counter. So no more comment on to it. But if the investors are holding, we would recommend that to take an active profits if you are in profits, and wait for the right point to again understand and come to the picture, because as of now it's a good part to exit out and take some profits.
Right, so book profits is the advice coming in from Rohan. Another one that's in focus today is ITI. The company has backed a 4,000 crore rupee order from BSNL with regards to 4G infra. Good gains coming in today's day of trade. Rohan, what would you advise an investor to do with an ITI?
We don't very closely track the company, so not more understanding, deep dive understanding. But recently, the developments what have happened are very interesting development. And see, these are all the companies which if one contract, it takes the change of the whole next to 3 to 4 years of revenue of the company. So as of now, a whole criteria for ITI from our side.
Right, so that's a hold coming in with regards to ITI. A BPCL is in focus as well. The profits have more than doubled, and this is mainly on the back of higher refining as well as marketing margins. Seeing the way crude is panning out from here on, what's your view on BPCL and any picks coming in from the oil and gas space?
See, I think so. Oil and gas space, if you see last 13 to 14 years, nothing is happening to the business. If you see GAIL, BPCL, market OMCs, including Reliance, right? If you see Reliance, if we discount Geo and retail, then oil has not got a major valuation out of it. So we believe from last 1 to 2 years, there has to be a U-turn and turnaround story into the business, where the margins are getting better, the profitability is getting better, but the revaluation of the company is not coming into the picture for the time being. If you're talking for OMCs, or maybe the oil producing companies, we would wait for the counter to look forward for a re-rating in the company and then go ahead, because it takes a huge patience for holding all these companies where the underperformance comes, and then you see certain sectors which are doing more better than OMCs, and then you tend to shift over here. Except you are a extreme investor and looking forward for a good dividend yield and a decent returns, then I think so BPCL or maybe any of the OMC companies makes a sense. But rather, if you're looking for a high growth, then I think so still it's a time to wait and then look forward to invest into this sector or BPCL for itself.
Right. So that's with regards to BPCL. Moving on, Rohan, you had a HEG which has reported numbers, and HEG and Graphite India. Both these counters have been really interesting ones because they had a fabulous run in that 2018 to 2019 kind of a period with the kind of up move that we saw. But since 2019, it's been on a downtrend. The rally did catch up in the last couple of years, but it's been pretty much somber. If you see on a YTD basis as well, since April to now, we've seen a good up move that has come in with regards to HEG. And if you see in terms of numbers, we've seen a dip of around 8.5% in terms of the top line. What do the numbers tell you? Because the profitability has dipped as well. And in tandem, you have a graphite which is mirroring what HEG is doing in terms of stock performance.
Yeah, of course. See, in 2017, 18, I think we were very early picker for Graphite India, and we understood this whole cycle very well. And it tanked much before we expected to, go ahead and go down fall. So the problem here is a lot of things from the graphite, from the materials to the raw material procurement, and there are 100 different problems to it. So onto the verge of except if you are into into specialty chemicals, and if you are into specific into 2 3 verticals, except any of the chemicals are looking very it's not looking very bullish on this part of the time. And looking for HEG or maybe a Graphite India, still that's not make a sense. See, there are two ways of investing, right? One is that you buy a bottom, you find that it's a great value to buy it out, and wait for next 3 4 years for the cycle to turn around. We as a fund house, we generally buy when the cycle has already turned around, and then we start investing into it. Because see, at the end of the day, we invest into the public money. So public money, we need to show returns, and we need to put money where the returns are getting more faster and accelerated. But see, graphite, looking for over graphite or HEG, we still believe companies like onto specialty chemicals, of course, that are not very same which I'm talking. Still, companies like SRF, Navin Fluorine, GNFC are much better pick than this all companies, because there's a huge risk any quarter which comes, and we can see a stock which is taking 20 to 30% downside. So that volatility risk and the drawdown risk of these two companies remains so high, for where we are not very bullish on these companies.
So that's not a bullish call coming in with regards to HEG as well as graphite. Moving on, Shree, cement reported numbers. Clearly, if you see in terms of the profits, they've almost doubled on a sequential basis. The stock is gained. What should the strategy be, Rohan?
Yeah, see, cement, I think so. The whole game has been gone to Ultratech Cement. See, Shree Cement has to be the one of the biggest, beneficial of a great capex business plus a superior model business. But in last 4 to 5 years, specifically post COVID, the way Ultratech Cement has taken over the business and the market share is extremely high. They are operating somewhere around from 26% to 28% of the market share, and that's huge in a cement segment. And of course the brand value that they have created, that is exceptionally well. So onto that cement, we are very bullish on cement. Of course, we hold companies like Ultratech, we hold companies like ACC. ACC still remains to be an extremely value pick if we are looking forward for coming back to your Adani question. ACC being a very good company, superior valuation, but because of Adani tag name and because of the merger, it had seen a great correction. In any of the Adani pick plus cement pick, if somebody wants to buy for a longer period of time with a great value, I think so ACC makes a huge value, and also it is one of the best value plus an ECG compliant company where cement has a lot of environmental issues, but it is one of the best into the pick. So Ultratech on the leader side and ACC onto the value side, both of them makes a huge sense. And let us not forget, what is happening in India. I travel maybe 15 days in India in a month, and it's not a single city, tier 1, tier 2, tier 3, where I have not seen construction happening. And we are not still Europe, where the construction has been totally off. We're still India. Next 10 years, construction is going to get on and on. And cement is like, the atta of our home. You need cement for anything. And that's where the cement value is going to be higher day by day.
Right, so that's with regards to where the cement pack goes. Moving on, you have a Vedanta, which is in focus. Rohan, they've announced a dividend of 18.5 rupees per share, and this is for FY24. A total outgo of around 6,877 odd crores is what we're looking at. The previous year, it was little over 100 rupees that we had seen. What would you advise an investor to do with the Vedanta? Because it seems to be a pure play dividend play.
Now, of course, I asked promoter these days why you give dividends, man. Because it's now purely taxable for investors also, right? And it's not taxable for you. Most of the dividend comes to the promoter bank also, because now highest holding of a company is promoter holding in most of the cases, right? And they say that generally the dividends are a investor friendly thing, where people just see that, oh, you give so much dividend, and that's a choice for a company, which I always have a different point to that. Why a company like Infosys, very great growth company, but a less dividend company. So I think so we should see Vedanta ahead of the dividend play, and where the value is still there in Vedanta. So being a purely a capex business, still it gives a dividend. That's great, because still the cash on the books are very high. But I would see this, that the growth of the company also doesn't come, because most of the cash has been given out of dividends. So tomorrow, for example, a company has a growth trajectory, from where the money comes, or you give so much of dividend that you don't have any agenda for. So I don't know both of the cases in Vedanta specifically, but if you remove dividend as a picture from Vedanta, still Vedanta is a great value, still trading at somewhere around below 10 times of the valuation. Doesn't look bad into the picture. It is a volatile thing, but if you look forward for a growth story, I think so Vedanta is still a value play.
Right, a value play is what Rohan thinks Vedanta is. And very lastly, our Finolex Industries, which reported numbers. Overall, if you see the results are in line, margins have improved. However, the volume growth is pretty low. The stock has been trading under pressure. What's your view on a Finolex Industries?
Yeah, see, also we have seen that Finolex has done exceptionally well. Just give me a second. I was just seeing the numbers of Finolex, because I don't track it very closely, this company. I had seen first of all, the group has been, one of the best groups to look forward for. Also, it is available at a very, very high valuation, with a profit taking 237 crores, on March 23. Looks not a great idea, because this company has been onto the under pressure, as you rightly told. I think so. It's a purely a PVC pipe business where is an extreme competition. So I would rather give a sell rating or an award rating for Finolex industry in the portfolio.
Right. So that's with regards to where Finolex Industries go. So a lot of movers and shakers in trade that we've discussed. Thank you, Rohan, so much for joining us on the show and giving us those views on those various stocks that we've been able to discuss today. But clearly, a good day of trade so far. We have Nifty as well, which is trading above those 62,200 levels, gaining almost 250 points in trade. And if you see in terms of individual counters, Reliance Infra, Adani Enterprises, R Power, Adani Power. So power counters are also seeing some smart gains in today's session. SpiceJet is down almost 8.5% in trade. HEG as well as Graphite India trading under pressure. Borosil is down around 6.5% on the back of earnings. NCC as well as KEC are also trading under pressure with regards to broader markets. However, if you see in terms of the Nifty as well, 18,400 is what we are able to maintain. So that's where the support is coming in at. And we are at the day's highest levels as we speak right now, with the advance decline ratio pretty much in favor of the advances. And you have Adani Enterprises, DVS Laboratories, Adani Ports, BPCL, Bajaj Finance seeing smart gains, whereas pressure building in with regards to Agrasim, Kotak Bank, Apollo, hospitals, L&T, as well as an HDFC Life. So a lot of stock specific action on the back of earnings, but it seems the underlying tone is pretty much positive in terms of where markets go. Please stay tuned for a lot more shows lined up for all of you. Thank you so much.